Okay, we are back. And we are going to go right to screen share. What we're going to do this next hour and a half is we are going to go through, first of all, Bitcoin, because I considered that completed Hyperwave, except for mopping up exercises in phase 7. So we will have looked at 3 Hyperwaves that I've actually participated in over a period of the last 30 some odd years. And then we are going to go much more quickly using the same techniques with the 14 or so stocks that we looked at yesterday, which we are presuming are in hyperwaves at various stages. And we are now going to say we know these are hyperwaves at various stages. What tools do you use for each of these individual stocks? And to get through that many, we're going to have to go fairly quickly after we get through Bitcoin. But we will be as thorough as we can, showing various tools, some of which we haven't shown yet. And then we're going to, in the last hour or an hour and a half, we're going to finish up that process with these and maybe some other charts that you did not see yesterday. Remember, all we did yesterday is say, here is one way of drawing a number of potential hyperwaves. Some are in 1s, some are in 2s. Some clearly are in 3s, some not so clearly in phase 3s, even some that are in phase 4s, 5s, 6s, and 7s. And we did not look at Netflix yesterday. I promised you we would do that today. So we've got a lot to go over. Let's get on with it. I'm going to share screen. I am going to pick this guy back up. I think that's what I wanted to do. Let me just think for a second. Yeah, that works. And I will make that big. And this is the NASDAQ. Everybody, Leah, is this seeable?
Yep, looks good.
Okay, great, thanks. Okay, now what we are going to do is move this little guy here. Come up here, go here. Go here. What I'm going to do, just for giggles, I didn't plan on doing this, but I'm going to. I remember, everyone knows that I have made public the fact that I've never bought a Bitcoin. And I think everybody on here knows that I did participate in this Bitcoin hyperwave through this thing called GBTC. So I'm going to just take a very quick look at GBTC, which to me was not a hyperwave. And there are people that disagree with that, but I'm going to just show you using Bitcoin, and then we will take a look at Bitcoin itself. Let's do it the other way. Let's do Bitcoin. And then I will show you what I actually traded, when, how, and why. This is the Bitcoin hyperwave. I've got a phase 2 drawn in both red and green. There's no difference between those two lines. I just wanted to make sure everybody sees the fact that this phase 2 line is what finally determined we could not be in a funky hyperwave when we drop below that, which happened to be very close to the 6,000 mark with all of these bottoms over here. So people that have followed me for a while understand that. I'm going to take these stop and reverses off. I'm going to put the moving averages back on because what we are going to do is just what we've done with the last two hyperwaves, the NASDAQ and Japan. We make the assumption we don't know this is a hyperwave. But we have learned a couple of other tools. One of them is Consensia. So if we take the price off because we don't know what this is and we don't care, we have this weird looking thing. And when you go back over here, this weird looking thing called Consensia, we can take it all the way back as we are under what is going to turn out to be phase one of a hyperwave line. We don't know it at the time, but we do know Consensia, and people have told us you should be looking at Bitcoin because this is really interesting. So back over here, this is too thin. If we kept going over, we can spread it out. Maybe, no, because you're at 20 bucks. Okay, forget that. Here's where you get excited if you know about Consensia, which would be 2013, the spring of 2013. All of a sudden, your wavy lines that your computer, you've got a bot that calculates this for you on 10,000 securities and things around the world. And it starts beeping at you because all of a sudden you've got this short term above an intermediate term above a long term. Now I'm not going to change this to a 2. Normally I would use a 2 on Bitcoin and cryptos instead of a 3 because you've got an extra 2 days in there. And a 3 would be more days than I would like. It doesn't matter. Use anything you want. But this thing starts getting interesting. You've got a bull market as defined by price above a short-term moving average, above an intermediate, above a long-term. And so you're going, oh, that's pretty interesting. You know, I'll put $100 in it and see what happens. And nothing happens, you know, through 2013, and we drop back down again and then go sideways. And now you're probably bored with it, but you're interested again over here. Why? Because price, once again, is above short, intermediate, long-term. The long-term wasn't really moving up through this period unless you took a microscope out, but it kind of was. Anyway, it does start up. Right about at this point, you can sort of see an angle developing on the long-term moving average. Okay, this is great. Bull market, your computer starts flashing, buy, bull market. You've read a little bit about it, but we're still in 2013. So good things haven't really happened. Not many people are in it. Bad things haven't really been too horrible. And you get a really incredible run. And you're above the moving averages the whole time. No reason to get out. Here you get some action, and you might step out of a little of the investment. Here you get some more action. And now things are actually going back down. And so you use your 5, 5, 5, 10, 25. As these things develop, as they cut through the long-term moving average, you start getting suspicious. And basically what you've done is you've dropped all the way down to, in April of 2014, you've dropped down to $400 after having had some wicks up very close to over the 1,000. Doesn't go over 1,000 on a weekly basis on the bodies, but you've got some wicks saying 1,000 is interesting, 1,000 is interesting. Here's again, 1,000 is interesting. So in the back of your mind, you're saying 1,000 is interesting. Okay. And then you give it all back, 60% drop down to 400. And Consensio takes you out step at a time as things are turning down and things are crossing. But the moving average is still moving up. Until over here, it stops moving up, it starts moving down. So somewhere you're 50% out, and then it's going awfully flat here, and the long term is still not really doing anything. I don't know. At some point in here, maybe you're just tired of the whole thing and you get out. Because you're below the moving average, it's moving down, and etc. Okay, I don't mean to be too flip. I just want to get through this fairly quickly. Now, throughout this whole period, it just keeps grinding and grinding and grinding lower. Some people want to say that earlier bump we just went through was a hyperwave. It's got certain characteristics of it. I don't believe it is. I think even though this thing moves at 3 times plus what normal things do, I can't consider that a hyperwave. Things are too short. Things didn't go high enough. The angles aren't exactly the way I like to see them. You can call it anything you want. I'm just telling you that's the way I look at it. And now you finally get to the end of this period of time where it's been grinding lower and just messing around. It turns out that was a pretty big bear market. Tone talks a lot about it. And then we get out of it again. Okay. Consensio gets you back in. The long-term moving average eventually starts moving up. So you've got to break down each of these to see how big are the moves actually and all that sort of stuff. Where are they actually crossing? How much you're doing 5 and 15? That's not what we're really talking about. We want to just see that the long term is clearly moving up here. The price is kind of screwing around $400, 440, but then it finally establishes itself. With these candles, we stop going sideways in terms of price and things begin happening. At 460, we go sideways, but still everything's good. Now we're back up, and now you start getting a spread between the moving averages. And as an investor, that's what you're looking for. You've got plenty of targets out there. This thing was pretty exciting running up to 1,000, but then for 3 years it didn't do anything, and all kinds of bad stuff started happening. But here, as an investor, things are getting really interesting with this movement, just looking at Consensio. Not knowing anything about hyperwaves, and we'll look at some other tools, but okay, so then it runs up and then short term comes down, breaks below the intermediate term, but the intermediate term is still moving up. Then you get all this stuff, including this spike all the way back to 460. These were up at the 700 level. Let's just do that so we can see this wick actually got up to 778. Okay, and then all the way back down to 400. But this is, some people would say, capitulation. The long term is moving up. Great potential turnaround candle. It doesn't really right away, but finally works its way back over. And now you're in the 600 range, and you spend months doing that. Then back into a full bull market. Only Consensio, full bull market, you get up to this magic 1,000. Well, you noticed it a number of years, 3 years earlier. This one gets up to 1,005. This one gets up to 1,139, but it closes at 909. This one closes at 1,011. This one closes at 1,000. This one breaks above 1,000, closes at 1,051. Now, people ask me, why do I draw phase one at 1,000? And my answer is because if you connect these candles, weekly candles, and run back into history, everything is below that 1,000 mark, except for a couple of weird little candles where you ran up above 1,000, but the bodies of the candles are all sort of below it. And then way back in here, where are we? We're all the way back to 2012. Okay. So that's why I draw my phase one line of a Hyperwave at 1,000. People can disagree with it and all that. I don't, that's perfectly fine. I'm just telling you, that's the way I look at these things, that when you've got evidence of a top, and then years later, you've never gotten above that top, and then you work your way up to it, and then find that top holding again, that to me is a definition of a phase one. And a breaking of the phase one at the $1,000 level in Hyperwave parlance begins phase two, and which are these lines here that you'll see in a second, begins phase two, and also tells you that if this thing turns into a Hyperwave, where it is going to return to. It's going to return to this 1,000 line. That's why the 1,000 line is there. It's not that I like round numbers. It could have been 836. It could have been, 1,327. I don't care. It just so happens that 1,000 was the number that makes sense to me as a phase one, because everything, basically all the bodies of all the candles for the 9 years previous to that were below that number. Okay. Now it all begins, but now we're not talking Hyperwave, we're talking Consensio. So what is happening at that $1,000 level for Consensio? It's been going up from 500. The long-term moving average, remember, we're out of this bear market, 2015, and the long-term moving average is moving up, and look what the price does. Now, if the price stays above that all this way, then Consensio is going to keep you in at least 50% and maybe more, maybe 100% at times. Every time you're above, the price is above, you're 100% in. Therefore, on the break above 1,000, Consensio, after this drop, which is above the long-term moving average and tested that long-term moving average with a wick, this break back above in price, Consensio gets you in, and it keeps you in until the sideways market, the sideways movement begins. And then you've got 5, 5, and 5s to get you out. Long-term could care less. It's just going to keep accelerating and accelerating. So now you're back into Hyperwave, but you don't know it's Hyperwave kind of action in price, where you get highs above highs and lows above lows, highs above highs and lows above lows, all the way to the top. And in that configuration, now even though this is a Hyperwave webinar, we're talking about overlaying this thing called Consensio on top of it. And in that configuration, what happens with Consensio is you end up just taking a little bit off the table when you don't know what's going on, because you don't know if this is the end of the market right here. It's just had a huge run from 1,000 to 4,800. This might be all, you're happy. So if you didn't know Hyperwave and you didn't know Consensio, you've just made an enormous return, almost 10x from $500 in a very short period of time. And so you're scared out with these drops that cut through moving averages, not knowing that this long-term moving average will keep you in, Consensio will keep you in at least half of your investment. But at various times you might take out 5 and take out 5 and stuff like that. Here you don't need to take out anything, even this big drop, because nothing happened. You cut through the short-term moving average, but you just touch the intermediate and then you're right back up again. And the long-term is taken out of play. So Consensio going into the top of this market, on this candle, price breaks down through it. That's why I use short-term moving averages. I want signals to start occurring as early as I can. That's why I use ridiculously short moving averages for my short term. 3 weeks, and it would be 2 weeks because of Bitcoin's trading 7 days. But this is a 3 week, and that's good enough. You cut through it right at this point, cut through the short-term moving average. The short-term moving average quickly moves down because of this candle, which also both of these wicks cut through the intermediate. This price action back up again, slows down the short in the intermediate term. This candle turns the short term back down hard, as does the next ones. The intermediate terms here, you're out of 555 at least. You possibly go for a full 25% out, 555 and 10 with this candle because of the depth of it below both moving averages, and during this next week the intermediate terms down. So you're at least 25. You're thinking more than that. You draw even just dopey trend lines, and you don't really see anything. You've been saying, wow, this is stupidly up. So you might have been thinking about, this is one of those weird things that when it goes vertical, I better look for an exit point. But if you didn't, if you were just looking at Consensio, then the cross here is important. Finally, down here where price breaks the long-term moving average and then comes back, which happens to be phase 3, this angle here, which is phase 3, which is why this was such an amazing candle for me, because in hyperwave theory, that could have been holding the phase 3 line, which it did for all of these weeks until it finally couldn't hold anymore and we broke down below it. But in any case, just on a Consensio basis, this starts you lightening up, and now you've taken 25% off the table. In these candles, because this is all coming down so steeply, you are perfectly in your right to take another 25% off. You don't take the last 50 off until this turns down, which doesn't occur until June. But you get out a little at a time, and then when this comes over, you're completely out of it. All right, let's take the moving averages off. Consensio, because of the sharpness of this move, would not have been particularly helpful in terms of hyperwave. Let's take a look at the stop and reverse points. I meant to take these on, and these on, and these on. Stop and reverse points work very, very nicely. Because they are moving up at such a sharp angle and they keep accelerating up because of the steepness of this curve, they just want to be knocked out, and they are on this candle. You're out on this candle. Now, just as you couldn't really see before, I will do my best to show you. That's pretty good. there's a stop and reverse point. Look how close this one came. It did not knock you out. There's a stop and reverse point. As price accelerates up out of this little correction, these guys begin to accelerate and the spread between them grows. You don't have to calculate that. You just do it using Wells Wilder's calculation, which is on TradingView. You just put that in. So the next one is up right about here if I'm eyeballing it. This one, and this one, and you're out. You're out at 13,514. And now you start down the other way, which you don't know because you don't know it's a hyperwave. And this keeps you out. Take a look at how close it comes here without hitting it. Keeps you out until this 4-week period where we run back up to 8,500. And then you're right back in because of the drop off of 8,500, and you have been out ever since. 4 weeks over the last 14 months. You were not completely out of this using stop and reverse, depending on how much you decide to take off at various times. Everybody makes up their own minds. Okay. So those are some tools that can be used when looking at hyperwaves and making decisions. And I'm going to stop there with the 3 that I lived through. Oh, I said I was going to bring up GBTC. And I'm going to do this because I traded this and I bought this in August, GBTC, and I sold it after this run up in December. Now, how and why did I do that? Well, because I was using Bitcoin as my trigger for this. I wasn't using this chart by itself. But let's just say you didn't know about Bitcoin. You came across this stock, and what you will see when you put the moving averages back on. Nope, we want this one. We want this one, and we want this one. Okay. And take the stop and reverses off. And take the price off. Okay. This is what you see. You don't know if you're looking at Bitcoin or if you're looking at the Japanese stock market. It doesn't matter to you. All you're doing is looking at the wavy lines. And just as we saw in Bitcoin, when this thing goes up, all the wavy lines go up and they are above, above, above and moving up. And it's almost the same. The difference between what we looked at with Bitcoin and this is this will trade at a premium to a discount. And the premium can be huge over the intrinsic Bitcoin. It can be over 100% more in value than the Bitcoin. It averages 40% for a long time now. It's been trading under 20, under 10 quite a bit of the time. And we've talked about that on various things. But just looking at this as a stock, which it is basically, they call it a trust, but it's a stock traded over the counter. As long as the long-term moving average is moving up, you're in it at least 50%. At various times, you're going to get out of 5 5s, maybe out of 15 on prolonged things, but right up to the top. And then the same crossover occurs, and you don't get the downturn in the long term until over here. So using only Consensio, you make an awful lot of money, but you get out late. And we figured it was something like 13,000 bucks. But many of you today would be very happy if you had only known Consensio and you followed its rules under all cases. Okay. let's just take a look at the stop and reverse points off of it. So it gets you out right. Now, this thing ran up to 40,000, 38,000. At the time of this run up, the Bitcoin it held was worth a little more than half of that. So you made more money on GBTC on the upside than you did on Bitcoin, because the premium ran from 40 to up over 100. You picked up 60% just because of the premium expansion. If you got out, if you didn't get out, the premium went from 100 back down to 40. Now it's at 12, and you lost all of that. That's why you get out of things, including Bitcoin. But for GBTC, it got you out very nicely at 23,000, approximately 25, 26. I was able to sell a lot of mine at between 28 and 32 on this because of a number of things, mainly that the phase 4 of the Bitcoin Hyperwave, which is this angle here, was so steep that this is the candle that took us out of the phase 4. Some of these that we've looked at, the SAR is better than the moving averages, which are better than the phase 4 of a hyperwave, but that all depends on that final angle. In this particular case, the best signal you could get was the phase 4 connecting all of these bottoms all the way up with this close below it. The close is at 14,000, but the penetration was much earlier. I wait for the close, so I wouldn't have gotten out on the drop, even though I wanted to. I didn't, but I cheated because I was in GBTC, and I didn't want to lose the premium, which was coming down fast. So I did not own Bitcoin. I did own a lot of GBTC, and I did very well just using these very simple rules. Hyperwave rules are simple, but you can't fight them. Okay. That's what I wanted to cover in terms of old. Now I want to begin looking at the charts that we looked at yesterday. And we're going to end with Netflix. We will just do it in the same order we talked about yesterday, starting with AES Corporation. And to do that, I am going to share again. I'm going to go to this one. That's where I was. I could have stayed there. I'm going to share it. And I'm going to change this over to move this guy over here. Indexes. There we go. AES. All right. Now, the lines drawn on the charts that you got yesterday, I don't have drawn on these, but in the next segment, we're going to bring Socrates back. We will pull up the charts from yesterday. I'm just going to look at the names of the 14 stocks we looked at yesterday, giving you the same analysis that I have just given you for 3 hyperwaves that I participated in and are no longer around. That's why we can get through this fairly quickly. We're not looking at hyperwave lines here. We're looking at charts that some of you that were on yesterday got to see where the phase lines are drawn. and then we're going to make the assumption, just as we did for the Nikkei and the NASDAQ and Bitcoin, that we know nothing about hyperwaves. That's what I'm going to do for the next hour. I'm going to assume we don't know anything about hyperwaves, although we got a sneak peek that all of the charts you're about to look at are somewhere in a hyperwave. And we're going to look at the things we just looked at, which are tools that I like to use. We're going to expand that a bit. Okay, this first one is called AES Corp, Electrical Distribution Company. And we are on the weekly. We got too much going on. Let's get rid of this stop and reverse points for now. Let's only look at, first of all, let's get a running start by looking at the monthly. This is 2007-8. We had this big run up. Now we go through this period of time through 2009. So I'm assuming what we're looking at is a phase one here. If we were talking hyperwave talk, I'm just trying to get my mind around what's going on, plus this breakout above those highs. Okay. So this is a fairly volatile company, and we're looking at it from the perspective of would we be in this thing because of consensus? The answer is yes, absolutely. Right back here, everything becomes fully bullish. Everything still is fully bullish. We would own this on the basis of consensus. Throughout this period, we would have been out most of this using Consensio, back in, back out, percentages, flatness. So that's what we're really looking at here with a longer perspective. Why would you be looking at this thing? Well, because from 2009 till 2 weeks ago, this thing was flat and the rest of the stock market was going crazy, right? 2009, 10, 11, 12, 13, right through today. This one wasn't. So that's a great looking phase one that lasted from 2009 through 2014 to today. That's a 10-year, 9-year phase one, and we just broke out. So why are you interested in it? Because you just broke above a horizontal trend line. We don't know it's a phase one at this point, and we're not thinking hyperwave. We're thinking this is a great little buy. So I can't give advice. I can only make observations. You are considered the public. But I'm just saying that forgetting everything else, take a look at AES. It's breaking out above a 9-year horizontal trend line. And you're learning something about a system that is very interested in horizontal trend lines. And we haven't lost anything. And Consensio was saying you should have been in this baby for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks. So depending on what your financial situation is, I would take a look at this. Okay. The only thing else I'm going to do some other things on all these charts. First of all, we always have to get rid of price. Don't marry the name that you're looking at. Don't marry the price or the fundamentals. Get rid of them and just take a real hard look at what you're looking at. A long, long period of sideways movement, a couple of attempts to do something, long-term moving average turns up, gives it all back. Long-term moving average moves down. Now you accelerate. Look at the difference between the acceleration here with the moving average moving up and the distance. These are above that moving average, bigger than here. So something new is going on. And when you go back long enough, you say, wow, this thing has the potential to do some crazy things. Maybe even earlier hyperwaves, looking very quickly at that. But regardless of that, okay, price back on, stop and reverse points. Moving averages off. Kept you out. In, out, in, out, in, out. Sideways action. Obviously in. Tried twice to break it here, didn't, and now it's really pulling away from it, which is going to get this thing to start accelerating. And when it does, the price has got to keep going up or this will knock you out. But that's kind of interesting. I'm going to do, let's put the Copic back. Yikes. That means what? Which is it this one? Yes, it is. Copic. Here's the zero line on the Copic as it goes above and below it. Now we're really accelerating higher, higher, higher than any of these lows since the runoff. So this is, from a technical point of view, this is looking really good. All we know from a hyperwave point of view is that, wow, this could be a 9-year phase one. Let's put it on our list as something to watch for the next 10 years because some big things might be happening. Way, way, way too early to make that conclusion, but we could look at RSI and other things, but since nothing's really going on there, let's move on to the next one. And somehow, how did that guy get up there? I wanted him down. Is it that guy? Nope. No, shoot. Okay, no problem. Okay, the next one is Lamb Research. Stop and reverse got you all of this, got you out, and right back in, but then got you out again. You've been out ever since. Looking pretty toppy from a stop and reverse point of view. So let's take a look at some other things. Let's take a look at the moving averages. So down at $35, a move starts. Moving average begins to accelerate up. You're fully in. Some fives, but nothing critical because you don't get below the moving average. All in. Some fives. Intermediate terms down 5. Go below the long-term moving average. Price obviously bounced right off of it, but anywhere from 25 to 50% out in the first fives, and then the next to 25. I probably wouldn't have gotten out of another 25. I'd be 25% out as it was testing this soaring moving average. The assumption with the soaring long-term moving average is it's going to hold the short term and the price. Let's see if I'm right. I have not examined any of these charts since yesterday when Socrates made them available to us. Yeah. So even though the moving averages and the price breakdown belong the accelerating long-term moving average, it's now turned around and we are soaring above it. Now, the question is, when and how are you back into it? Short-term bottomed here.
Hey, Ty.
Yes.
You're on the monthly.
I wonder what changes that. We were on weekly. Weird. Okay, thanks. Somebody write a letter to TradingView. Okay. Okay, beautiful. Yeah, completely out off of that top. Long-term moving average moving down. Everything down. Tries to test, it doesn't work. Completely out, 100%. Down to the bottom. Below, below, below. Until this price took off. Where do you start buying? You start buying when the price turns the short-term moving average up and the short-term cuts above the intermediate term on this candle. Probably 555. Right here, the intermediate term turns up, definitely 555, thinking another 10. Here, you cut back above the long-term moving average, at least another 10. You want the long-term to move up, but the price is so high above it, it's going to start soaring because the short and the intermediate term are already above it. So somewhere around this candle, you are 50% in, and somewhere in these two candles, you should be 100% in. Amazing turnaround. And amazing how the long-term monthly is just getting the crossovers here. So this could potentially be a very, very big move because not only has the weekly already gotten you in, but the monthly is now verifying it. So that's very interesting. Let's look at the weekly SARs. You've had 1, 2, 3, 4 weeks up. That means this is the week that took it out, and it took it out right here at 152. So you got out of the shorts at 152 and you went long 152 off of the stop and reverse points, and it's now up to 181. And it's moving so fast, it's going to take forever for these to catch up to it unless the price goes sideways or down.
Tyler?
Yes.
I'm going to ask a couple live chat questions as well.
Right.
Is LAM in a hyperwave?
Let's zoom out and just give a quick analysis. That looks like a phase 1 to me. Comes all the way over here. This is the breakout, making this the phase 2. Making this, well, now we got to sharpen our pencils. And we will examine the phase lines this afternoon specifically. But it's clearly a hyperwave. The question is, where is it and what phases are they? But I would say that after that breakout, that looks like a 2, which is very steep, which could mean that the 2 is actually back here. And this is the 3. And this is a 4. In which case, the 4 is broken and we have gone to a new high above the 4. So we'll see when we take a look at the actual phase lines in the next segment. But something very interesting is going on there, obviously. Okay, so I'm going to take those off again. We're back to the weekly. And I'm going to take the stop and reverse off. And we're going to pull up 3M. I said yesterday, this is one of my favorite companies for personal reasons. So we're watching this thing very closely. Where would I be in terms of if I did not know about stop and reverse or hyperwaves? 1, 2, and 3 weekly. In for almost all of it up to the top, besides the little 5s and 5s. Now completely out of it at this point. So the question is, when we look at this, is this a 3 over here somewhere, or was this a 4 that's broken and we're starting the downside? But we're not talking hyperwave. Consensio has gotten you completely out of this at this point, and you are still out of at least 50% because this is long-term's not moving up yet. But there have been a couple of occasions where it's attempted to, moving averages have gotten back over the long term, but then gotten knocked back down. Right now, it's too early to say, but it could have bottomed the way the S&P could have bottomed. So many other stocks could have bottomed back in December and are reestablishing themselves above all the moving averages. And so the question remains, does the S&P break out to the upside here or down? And I'm saying S&P because so many charts look just like the one we are looking at now. 3M is in the middle of all of it in S&P and one of the biggest companies with the longest history. So it's going to act like the big indexes. And I think it's too early to make the call. On a consensio basis, it clearly is. You do have a crossover of the short above the intermediate, but they really haven't crossed the long term yet. We're in that area of resistance that so much is we're looking at right now. Let's see what this, if the SARs would have gotten you out of that. Why does that keep doing that? Stop it. Okay. I'll leave that up so we don't have to keep clicking off things. There's the stop and reverse. Got you out really quick. Kept you out. Back in, out shortly. It's still out until last week. That's interesting. Just as we're trying to figure out on so many things, is this for real? The stop and reverse has been taken out after 1, 2, 3, 4, 5, 6, 7 weeks, and is now supportive. And all we need is another week, and it'll be fully bullish if we hold where we are or go a little bit higher. Okay, this is good. Here's the RSIs. I wanted to pull those up on the others, but for some reason they weren't there. One thing I didn't show you on the Nikkei, on the NASDAQ 100, and on Bitcoin was this action that takes place at the top of all of the hyperwaves that we are looking at. Assuming that this is a hyperwave, you can see how overbought it gets at the top and has never gotten oversold at the bottom. I'm going to just really quickly, since I've got that up, pull the NDX up. Go back monthly. Here is what happened running up to the top of the hyperwave, which looks exactly like Bitcoin. And here in 2009, it finally got oversold at 30. That's a monthly chart. Very difficult to get a monthly chart oversold, even though it had gotten way overbought. But it did get oversold on a monthly basis. On the weekly chart, this is the peak in 2000. Here, does that automatically switches to the monthly? That's very irritating. Okay, here's the peak in 2000. Going up to it, all of this is wildly overbought above 70, above 75, above 80. A couple of these are over 85. And Bitcoin looks exactly the same. Both of them are hyperwaves. We have come down and breached we went to 30 on Bitcoin. And I said, I think it's got to get a lot lower. These got down to 25 and 26. And finally, in 2009 to 19. That's oversold, correcting this. Okay, so I just want to show you one other thing very quickly, which is right here. Here is the hyperwave on the Nikkei, 85, 80, a bunch of in the high 70s. Here is what you have to do to unwind that: 21, 24, 25, 22. I don't say that about long-term things except for hyperwaves. The reason I've been so adamant that the bottom is not in from a technical basis on Bitcoin is because that RSI shows that there has not been capitulation, even at 3,180 or whatever the number was. There it is right there on a weekly basis, a 28 on one occasion. Try and look where that occurred. It occurs, of course, right at the bottom candle at 31 to 3,200. So what we are going to see, in my opinion, is the reversal of this. Not just popping up to 70 and getting overbought, but screaming above wildly overbought territory. That's what a hyperwave does on the upside. And it does exactly the same on the downside. Okay, back to business, which is back to this. Okay, we did 3M. Let's do a biomed. Let's bring this down where it belongs. This is a biomed. We'll take a look at the phase lines off of the other charts that we have. But for now, you can see what happens with stop and reverses all the way up, getting you out fairly early. Long-term consensio here turns down 100%. And now, just like what we saw with 3M, this attempt, along with 4 weeks up on the SAR, to get back above the long-term moving average and give it time for the short and the intermediate term to catch up and give buy signals. So it's in the exact same position. You can see that this is hyperwave-ish. And otherwise we wouldn't have used that chart that we did yesterday. There's the 1 into the 2, the 2 into the 3, the 3. This is interesting that this broke down, which could mean that the 3 is still intact. And I don't want to look at the phase rise. I'm just looking at what these other signals are telling you about this formation. So when you do look at the hyperwave things, it gives you the additional information for you to make your final decision. And you can see that there's nothing oversold here coming off that. This is 40 on the bottom here after being way up here at 90 on the way up. So if this is breaking down out of a hyperwave, which we will take a look at in the next hour, then it's got a long ways to go. If it is actually holding 40 for the RSI, which sounds more like holding a phase line, which means that that initial pop-up to the top there was not a 4 breaking down. It was something else. So we will examine that in our final hour when we put all of this together. Put other tools, and we're going to add one other tool that Socrates is going to talk about. I mentioned it yesterday afternoon, having to do with playing hyperwaves by using prior highs to set stop limits. Okay, I want to take a quick look at Kimberly Clark. Get rid of this. It's been coming down for a long time. Make it bigger, see what we're looking at. There it is. Huge run up. Okay, so the question is, are we in or out, not knowing anything about hyperwave? 'Cause 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 ' We're clearly out throughout this whole period. Long-term moving average has stopped going down because of all this activity. Are we in long? Short above intermediate. Intermediate is still not turned around because of this big red bar. Seeing a consolidation right below the level at which, if the markets break to the upside, this is probably going. The long-term moving average went flat, now is moving up. December, January, February have been very important for the U.S. stock market. Kimberly-Clark falls into that category. Stop and reverse, as you can see, have generally done what they need to do, which is on the way up, you get big long runs, and then it takes you out, and it takes you out very close to the top, within a bar or two of the top. Going down, the same thing, unless you're interrupted. All the way down, takes you out just about at the bottom. Very, very powerful, handy tools to have in your tool chest, just as a way of double checking bigger things. Okay, APD is air products and chemicals. We looked at this yesterday and we were kind of blown away by the chart. That's pretty amazing. So where 3M and a bunch of these others are not breaking out yet, this one is breaking out of this huge consolidation that's been going on for in 9 months. And we are at new all-time highs on that. And of course, we're in it long-term moving average moving up, all the others above it, price above it. So we're 100% into that. Wow. Let's get rid of the stop and reverses. Let's get rid of the price. What a run. From 75 to 140 since 2013 to 2015. And then that was wicked. 2016 and 15 really hurt a lot of people. You're back in with this turning up right there. Okay, back on. Very interesting. Amazon. We looked at the chart yesterday, and it's clearly in a hyperwave, not even drawing any lines in it. The question is, how specifically can any of these other tools help us figure out, are we just coming down to a 3, or was this a 4, 5, 6, and a 7, starting a 7? When we pull up the chart, we'll take a close look at that. But according to Consensio, at this point, you're fully out. All the action below it, this little bounce, you might put a little bit in, but I doubt it. So Consensio is saying you should have been out. You would have started taking it out up here on the crossover of the intermediate and the short to the longs. Basically, you're completely out down in here. So stop and reverse. Once again, get you out at almost the absolute top. Let's just assume for a second this is a 4. Stop and reverse. Looks like it got you out a week or two before you would have gotten out with Hyperwave. So a great tool in certain kinds of markets to help you make a decision of what to do with your portfolio. It's really, oh, I see what the problem is. Okay. Amatech, working on a broadening top. If this gets higher than this, you've got a 5, 4, 3, 2, 1. In fact, you've got a 1, 2, 3, 4. No, it's still a 5, but it's not there yet. Moving average has gone flat to down. And all of this action basically is Consensio has you out with this downturn right here in the long-term moving average because all this action is below it. Now we're trying to break back up to the upside. Short is above intermediate, is above long. Intermediate is not above long, but intermediate is moving up. So it looks like it's trying to reestablish an upside, which could very well mean a new high. It would then be this thing called a broadening top, also called Selden trading system. And the stop and reverses, you get whipsawed over and over, but up here again, you're out pretty early. Well, maybe not until this one, but in this trading range up at the top. So we need to take a look at that one from a Hyperwave point of view to see if any of these additional things would have helped make decisions of when to get in and when to get out. The big thing we want to do, though, is assume all of these are in some phases of a Hyperwave beyond phase 2, so we can talk in our last hour and a half about decisions that you make in these long-term upswings instead of just holding them. Are there times that you can take advantage of the distance you get above the long-term moving averages to take profits? And the answer is yes, of course. Using one thing is parabolic stops, and you can increase the speed with which that parabolic move moves up to protect yourself by getting you out earlier and earlier. Or we will take a look at how far above trend lines or phase lines, particularly 3s and 4s, you get before these corrections take place that bring you back down to long-term moving averages or to phase lines, where you should either be out waiting to buy back in every time this comes down to these long-term moving averages and find a level at which that you believe that it's overextended enough that you don't mind stepping aside and maybe letting Consensio, instead of going 5, 5, 5 out, you go 10, 10, 10 to accelerate that pace. We'll talk about that in detail off of these same charts, but with the phase lines drawn on them. Okay, this is Abbott breaking the new highs. We saw Kimberly looking really good. And okay, so let's take a look at Boeing. We talked about it briefly yesterday. This remarkable new move, and it's clearly not over. The question is, where is it moving from? Where would you be in and out? You're fully in Consensio. You're in with stop and reverse points for the last 5 weeks. Relative strength is, that's very interesting, that after this huge thing, it, like the other one, only dropped to about 40 before moving back up and is quickly becoming overbought. But if I had to guess, we're going to get back up into the 80s and 90s on the upside here. Honestly, it's oh, I lost all that stuff. Okay. What I am going to do is I'm going to go here and here and here. I messed all this up. I must have hit the wrong button somewhere. If anybody can see what the heck it is that just happened.
They say just double click anywhere on the chart.
Nope. Oh, there it is down there. It switched places. Put the RSI on the top. Okay, good. So we don't really want that. What we want is, we were just looking at Abbott and breaking to new highs. Boeing, we looked at breaking to new highs, which should get some of us enthusiastic about this week coming up in the market. ATBI, okay, that's horrible. Fully bearish. Question is, where is it? Is this a trend line that was broken, a phase line? Maybe. Apple, fully bearish, 3 weeks up on the stop and reverses, but long-term moving average moving down. So that'll be interesting to look at. The RSI did get oversold here a bit, right at the bottom. It's interesting. Okay. Just take a quick look at GE. 8 weeks in a row. To the upside, we need to break above that long-term moving average, which is still moving down. This looks, a little bit like what we saw at 6,000 for about the same amount of time on Bitcoin, the plunge, but this one's moving up and Bitcoin isn't. And we said the target on this, I believe, was like either 2 or 5 off of what it looks like. And we just go monthly real quickly. Most amazing charts there is. We've taken out that low. And so if this is the phase one, Yeah, it's could drop 80% for here if it's going to hit phase 1, which it has not yet hit. If this is all part of the phase 7, first of all, it shows how long a phase 7 can go on forever, driving everybody nuts. That's just unbelievably unusual. So we picked out some very difficult ones to analyze. This one is the one that we said we will go into some detail today because we didn't get to it yesterday, Netflix. And the question is, where is it? Is this a 4, 5, 6? Or is this still part of a 3? And that's what we're going to look at this afternoon, using these other things to help us make that decision. The stop and reverse is negative, and it's coming down. We came right up to it last week without breaking it. If we just sit right here, it will break this week and become positive beneath it, which means that 6 might have a ways to go. If we get a negative candle starting at the beginning of this week, then the stop and reverse can chase it all the way down much, much lower. So this, to a lot of us following the hyperwaves, is one of the more important charts because...
Ty, that's on the monthly again, just letting you know.
Yeah.
Cool.
Because it is so reflective of the FANG stocks. And therefore, what the FANG stocks are doing, if this is actually holding here, and we will look at it very, very carefully this afternoon, then it could be that this is a real move going to new highs. Now, on the stop and reverses, you've got about 7 positive weeks. You've taken out the downtrend line, which has not yet turned up on the long-term moving average, but both of these have turned positive. So if you're playing this as a 6, it's still in a 6, and you've got the possibility of it going to new highs, which means this was not a 4. Is there any way to tell before that? Well, when we pull up the Netflix chart with the lines drawn in, we will critique that very closely. And then that is it for the charts that we had. We've got a bunch of other charts: Citigroup, the Russell 2000, Caterpillar, VLA, McDonald's, Nike, and Amgen. We're not going to get to them, but we will give you a list of them with some charts at a later time. What we're going to do now is we're going to take a break away from these. We are going to bring up yesterday's charts on these same 14 positions we just quickly looked at, looking at RSI and stop and reverse and Consensio. And we will superimpose the phase lines on them and then do very specific analysis on investing in them right now, regardless of exactly where they stand. So with that, I'm going to stop share and I shall be back. Thank you.